Hey, what's going on, everybody? So thank you for coming and checking out this video. If you guys have liked all the videos that I've been doing for you guys, please give this video a thumbs up, subscribe too, because I'm going to be posting a lot of videos this week, and I don't want you guys to miss out. So if you guys don't want to miss out, turn your notifications on so you guys get that instant notification. So as you guys know, we have been following indices for quite some time now. Now, indices are one of my favorite plays right now, and it just keeps on getting better and better and better. All my students in my academy, my members, we already know the game plan. I'm going to show you guys a little bit about my game plan. I'm not going to give you guys everything because that would be compromising exactly what I'm teaching in my academy for all of my members. So I'm going to look at S&P 500 right now. So what do we notice about S&P 500? Now, what happened today was we had a pretty big pullback of about 4.5% in the markets. So that pullback, whenever we have pullbacks that strong with indices, I'm going to be looking for buying opportunities because we've been in a bull market for like the last 7, 8, 9 years. So with these pullbacks, these are actually really healthy with the markets. Now, this pullback today was due to fundamental reasons. If you guys want to see what fundamental reasons they were, if you guys are watching this video now, then you guys can go ahead and look at investing.com. Now, when you use investing.com, that's a really great tool for economic news. I mean, Trump with his tariffs and interest rate hikes, fears of rising rates, that's what's going to go ahead and, it can either make, if it's dovish or hawkish for one of these for these indices, currency pairs, whatever you're looking to trade. So right now, what we're looking at is we're going to be looking for buying opportunities on S&P 500. So I'm going to go ahead and help you guys find a bottom. I'm going to help you guys find an entry, and I'm going to show you guys a little bit on how you can go ahead and manage these trades. So what we're looking at is, of course, you have the 4.5% decline in S&P 500 the last 3 days. Now, with this wicking right here, if we go ahead and place this horizontal line, you can see that there was a pretty decent support zone right there. So when we go to the weekly, you can see price actually where that support line was. There's some confluence right there. The support line and the 26-day matched up equally. That being said, what we can go ahead and do is we can go ahead and buy in this level, put our stop loss down here. Now, I don't recommend any small accounts to be trading this. If you have a $100 account, $200 account, $300 account, I don't recommend you guys to be trading this. The reason why I don't recommend you guys be trading this is because this is pretty volatile, especially when we're trading in fundamental news and a bunch of fears of interest rate hikes and rates rising. This isn't for you guys because you guys can blow your account if anything goes wrong or you fail to put a stop loss or you don't understand how to calculate your risk-reward ratios. So that's why I don't recommend any beginners or anyone who doesn't know what they're doing to be trading this currency, this indice, or this trade in general. So I would be looking for buys right here on the bottom, and I would be looking to take it right back up. I mean, I would like to see price come back up to this ATH right here, this all-time high. If it can come back up here, we can go ahead and see it go way higher. I mean, it's only March of this year. It's been about, January, February, March, 3 months throughout the year. We have a lot of time. Now, these are high speculative trades that we're looking at right now. If we go ahead and take a price range percentage, we're looking at what? 8.17%. If we're looking to buy exactly what we're looking at. 8.17%, that is really, really good returns. If you can find a really good bottom and an entry and you can trade a mini lot or a standard lot, you're going to make a lot of money. If we can do that in the next 3 months, get back to that all-time high, you guys are going to make a decent amount of money. Also, if you guys are looking to trade this, let's say we take this to the end of 2018. We close higher than that. We're closing at 15, 16% S&P 500 is closing for the year. You guys are going to have enough money to put a down payment on the car. You guys could, maybe even depending on how big your position size, how much you could risk. Because if you can, the more money you can risk in the market, the more money you can make in the market. Depending on that, you guys can buy a brand new car. You guys can pay for your college debt, whatever you need it to be. So that's S&P 500. That's how we're going to go ahead and attack this one. Let's go ahead and look at Nasdaq 100. This is one of my favorite indices as well. So let's go ahead and look at the daily chart for this. So we can see we had a lot of rejection right here on the cloud. Now the future's still bright. It's pretty bullish right here. I personally would like to see price come right back up, bounce off this cloud, go right back up here, and we can retest the all-time high. Now, this is the same thing. All indices pretty much move in correlation with each other. Now, these U.S. news can affect indices, the whole general market. If you don't know what the Nasdaq is, if you don't know what the S&P 500 is, if you don't know what the Dow Jones is, I highly suggest what you guys do is you guys go ahead and research what these are. So if we're going to be looking for buy opportunities, we can go ahead and look for opportunities right in this level, or we can go ahead and go to the weekly time frame and we can wait, is pricing coming out of the 9-day, then go right back up. So that is how we're going to do this trade.